Good morning, everybody. Fantastic to see so many people join us this morning for this Advice Show special. About a month ago, we got the final rules for consumer duty, and this is part of the journey that we have already been on and we're going to continue to be on in relation to consumer duty and the support that we can provide you and helping understand what the challenges are, what needs to be done, what may be mandatory, what may not. My name is Janice Laing and I'm the Managing Director of Compliance First and part of the leadership within SimplyBiz overall and also the project team. So today I have many of our gurus with us from our policy teams, consultancy team, business consultancy, and effectively I'm going to be quizzing them today to try and support you and help you understand exactly where we're going. We've started to fully analyse and continue to work with this significant piece of regulation and its implications. So on this show today, there's a few things. I'll just occasionally look down so I make sure I'm following everything as I should without reading entirely off a script. But first of all, we're going to look at considering the rules and what they mean for advisory firms. So let's take it back to basics. What are the rules? We had the consultation paper. There's often not much change then when the policy comes out, and there hasn't really been. So what are those rules and what do they mean for advisory firms? We will then take a look at questions that we've already been asked. What questions have been coming into us? So trying to hit on the key things that are maybe already in your mind already. We'll then look at it from an investment and pension perspective and also from a mortgage and protection perspective. Sometimes we think, oh, these rules won't apply so much to me because, I only advise in mortgages or I only advise in pensions. Well, this affects everybody and we need to look at it from the different perspectives. But we'll then look at the practical application, so as if the rest of it all wasn't important enough. What's the practical application and what do you need to be thinking about and what do you need to be doing? And of course, what support will be available from SimplyBiz. So that's for all of our Compliance First clients and for our members and perhaps other firms who don't at the present time engage our services. So I would like to ask our two policy gurus to come live. So Richard Nuttall and Sandy McGregor. Richard's role is Director of Compliance Policy and Sandy is Senior Compliance Policy Manager. So there ain't much that these guys don't know about consumer duty and they've got their heads down and in the detail. So these are the guys that look at the detail and then put it into simplified terms for the rest of us to try and understand. So really it's over to you guys. First of all, sort of really the three main questions for you, hopefully you can answer for us. And I think the first one is, what is consumer duty? And then followed by that, what are the headlines that we need to be thinking of? And then what are the key considerations for firms? So over to you guys. Sandy, I think you're going to kick off for us.
Yes, thank you very much, Janice. Well, in short, consumer duty, it's a brand new piece of financial services regulation that applies to the whole of the retail financial services industry. So that's to all regulated firms and all products and services that are offered to prospective and actual retail customers. It aims to drive a fundamental shift in the culture and behaviour of firms and also, importantly, to empower consumers by placing them in a position where they can make effective decisions and take responsibility for their actions. And certainly, if I was a firm, probably the first question I would ask would be, why on earth are we having to deal with yet another layer of regulation? Well, firstly, the FCA was actually instructed to do this work by Parliament, and one of the reasons for this was evidence presented by the Financial Lives Survey in 2020. So some pretty concerning statistics in there, one of which was that only 42% of adults had confidence in the UK financial services industry, and just 35% agreed that financial firms are honest and transparent. Now, we have seen some pretty high-profile examples of the ugly side of financial services in recent years. Inappropriate products being sold where not suitable. For example, high-cost short-term credit to vulnerable borrowers, complex investments such as contracts for difference sold to inexperienced investors, and the exploitation of customer loyalty and inertia in the general insurance sector, to name just a few. When introducing consumer duty, the FCA also has one eye on technology. So consumers are increasingly transacting through digital sales channels. And whilst in some cases this can lead to greater choice, it can also result in complexity and risks. The potential that consumers might not make effective decisions or may be exploited, particularly where they have a characteristic of vulnerability. So the regulator is concerned that harms have become entrenched in certain sectors, and that has led to the desire to create a paradigm shift, to use the FCA's own words, through a suite of rules and guidance and a new overarching consumer principle.
Yeah, I think
when you go, Richard. Yes, Richard, I'm getting mixed up with everybody's names here.
Yeah, I think this consumer principle is really important. I think we might have a slide on this, Janice.
We have. Louise is just putting that up for us at the moment. That was our technical challenge earlier, Richard. So we're just getting them up in the background. So
because I thought that was an absolutely fabulous introduction from Sandy. And it really does tell us what is the big drivers behind this consumer duty. The big thing to come out of it is this new principle, which firms must act to deliver good outcomes to its clients. I think firms will be thinking two things. First of all, that's what we do anyway. You know, we set up the business to deliver the right thing for our clients, and that's the reasons why they have confidence. It's the reason why they come back, and it's the reason why we get good referrals as well. But at the same time, you're probably thinking, well, what actually does it mean? What is it that we've got to do to ensure that we do deliver these good outcomes? So what are the expectations? And I think this was summed up probably best by Sheldon Mills when we had publication of the final policy statements. A press release came out, which was kind of summing up the consumer duty, what it is that the regulator wants to see. And it was these areas here that you'll be able to see in front of you. You know, we want to end rip-off charges and fees. We want to make it better for people who suddenly find themselves in a product or service which isn't suitable, and to be able to move out of that into something which is better for their needs. We want consumers to have the right support and access to support at the right times, making sure they get the information at the right times, which is clear, which they can understand, so they themselves can make informed decisions on, about having products and services actually meet the needs of consumers. And of course, above anything else, it's about meeting and understanding the needs of vulnerable clients. And I think, with the exception of the first one, and I was actually quite surprised when I read that first statement, ending rip-off charges. And you know, I've been working alongside regulation since, well, the early 90s, and in over 30 years, you know, to have a regulator come out and says we need to end rip-off charge and fees, I find it quite alarming, and I find it sad, if I'm perfectly honest. And I think it's right that the regulator addresses this and challenges this where they do see it. I confess I rarely see this with the firms we deal with, and that's why I say, with the exception of that, I think firms will say, well, look, this is what we're doing anyway. You know, we are putting our clients at the heart of our business. But again, it's about what we actually need to do to actually show that. How do we evidence this? And the way in which the firms are going to have to do that is through the 4 outcomes which have been set out by the FCA. And these outcomes, if we can just flip over, Janice, will show us that, well, this is about products and services. This is about ensuring that products and services do meet the needs of clients. It's about the fair value, the pricing of products, about ensuring consumers understand and consumer support. And I think that a lot of the reasons why individuals use advice firms is because of the support that they do get from them. But look, this whole consumer duty is not a brand new initiative. We've seen an awful lot of work being done in the background in recent years. So more recently, we've had rules on the restriction of high-risk promotions to vulnerable clients, make sure that the high-risk solutions that Sally was talking to aren't mis-sold to consumers. We've had policy statements on GI pricing, stop people sleepwalking at the time of renewal. We've had, within the mortgage side, recommendation of the cheapest mortgage products. We've had a call for input on retail investments, and we've been actively engaged with the regulator on that. We're going to see a better regulatory market for consumers. We've seen it under consumer credit, whereby disclosing of fees becomes more prominent. We've also had it as well on a pension transfer. We've had new pension transfer rules. I'll just use that to give you a bit of an example of what we mean by price and value. Is that we know that anyone who is within a DB, a final salary pension scheme, more often than not has to take advice in order to transfer. And that's because not just the regulator, but government recognises the value of advice. It is valuable, and there will be a cost to that. And that cost will be whatever the firm decides. But when you've got a pension transfer, they've now brought in not just clearer disclosure upfront in terms of the actual cost, which has become very, very personal to an individual in the way it's actually set out. But we've also got the triage and abridged advice. So whilst advice is very, very relevant, there may be instances whereby there should be no reason why an individual should ever move out of their particular DB scheme. And therefore, to actually pay for the advice, to be told that, might not represent fair value to that individual. And these are the things that the regulator tried to address, to say to someone, look, no point you taking advice because you can be paying for something that's not going to offer any end value. So we've seen a range of initiatives. But for me, the big one is consumer understanding. And I say that because if we don't get the information to clients at the right time in a language that they can understand, whether it be through financial promotion, whether it be through initial engagement, whether it be through that sales process to ensure the clients understand the products and understand the risk and disadvantages relevant to them and that ongoing suitability, then everything else falls down as well. So I think it's about ensuring we communicate with the clients ways in which they can understand and relate it to their own personal situation and ensure they're fully informed of all the risks. And of course, it's about putting all this together to demonstrate as a firm that's exactly what they can do. They can actually demonstrate it. And this is where we're going to help and support them, aren't we, Sandy?
Yeah, absolutely. Thanks, Richard. So before I launch into our support, I just want to say a quick word on reasonableness and proportionality. And the FCA has actually stated that it will interpret the duty in light of what is reasonable given the circumstances. So that means rules and guidance must be interpreted in line with the standards that could reasonably be expected of a prudent firm carrying on the same activity in relation to the same product or service. And proportionality will be a factor too. So the FCA states that whilst all firms have the same responsibility to act to deliver good outcomes, it does recognise that there will be significant differences in the capacity and capabilities of some firms over others. So for example, a sole trader firm on the one hand and a major bank on the other. That said, consumer duty cannot be ignored and it cannot be treated as a tick box exercise. So it doesn't matter if you are Barclays or Santander or Ben or Sarah operating out of a back bedroom, the consumer duty will apply to your firm. However, the good news is that the consumer duty is not dropping into a vacuum, as Richard has just explained. It's dropping on top of a lot of existing rules and regulations. And for that reason, our core support for firms will focus on a gap analysis style review of your business from the perspective of ensuring good consumer outcomes. And actually, the front page of that document is on the right of the screen now. So this gap analysis, it will look to identify what works well, where there is room for improvement, and also what additional support we have on offer to help you meet these requirements. So this master guide will be made available shortly to you on the Consumer Duty Hub, and this will provide a steer as to the key considerations for your business, looking at a number of areas such as client engagement, sales practices, how you evidence good customer outcomes, how you deal with vulnerable customers, what your post-sales practices and methods for collecting feedback are, and how you review your business activities. So firms will use this master guide to complete a firm-specific template, which will record the outcome of the assessment, what action needs to be taken, who will be responsible. Now, it's important to emphasize that firms are not just recording here what needs improvement, but also what is good about your business, what you do well, and what evidence you have to support the assertion that your business creates good customer outcomes. I mentioned already that this won't be a tick box exercise, and that's because consumer duty is very subjective and it's very firm specific in its nature. And therefore firms will need to use this gap analysis to provide the regulator with a good articulation as to why you've determined a particular route of action is appropriate. And that is what our gap analysis is designed to help you do. So there will be further hands-on support available to your firm from around the business, whether that be from Karl DInes and the business consultancy team, or Jennifer and Paul and the field compliance team, who you will hear from shortly. So you're probably wondering now how long you have to complete this exercise. Well, the good news is that the implementation deadline has been extended, but the bad news is that it hasn't been extended by very much. Firms will have until the end of July 2023 to implement the requirements of the consumer duty in relation to products and services which remain on sale or are open for renewal. Firms and their senior managers thereafter will then need to revisit and approve this assessment at least annually. However, the sting in the tail from the most recent policy statement is that the FCA expects firms to have a plan of action in place by the end of October 2022, and they may ask to see a copy. So the message is firms will need to be proactive and cannot afford to leave this until the last minute. So in summary, whilst you cannot ignore the consumer duty, Richard and I strongly believe that through this review process, many of the firms we support will find that they are already doing a lot of good things to meet expectations, and that you're in a very good position, and that consumer duty will not, in fact, be something that will keep you awake at night over the next 12 months.
Thank you, gentlemen. Sorry, Richard, on you go.
No, I was just going to say, Sandy, that's exactly the case. You know, this session might put you to sleep, but please don't let the consumer duty wake you up, because you know, we've got it all in hand. That implementation plan is essentially the gap analysis that Sandy is referring to. Work through that over the course up to the end of July next year. Implement any actions which you've identified. Don't be daunted by the gap analysis. It might look daunting at first, but we've literally had to cover every single angle from this, and you'll probably find that not a lot is actually relevant to your firm. That's a really positive thing, Sandy, like you were saying, because it shows that the firm, you know, is low risk and is providing good outcomes. So, you know, we're going to support you along the way in doing this. So, thanks, Janice, for giving the opportunity to say all that.
Not at all. Thank you both very much for articulating it so well and giving us the background and the first steps, really, because the gap analysis is all about that thinking process. Have you got it in place? Can you actually evidence it? You maybe know what the information is, but is it documented? Could you provide it if the regulator wanted it? So thank you very much, gentlemen. I appreciate that. We will see you at the end for the questions and answers. So again, there's a number of questions coming in at the moment. I'm just trying to keep an eye on them in the background, so we can keep dipping down, our eyes keep moving away from the screen. I'm listening to the guys, but also just checking out there. If there's any key questions as we go along, if we have the time, we'll pick them up. If not, we do have a Q&A at the end. It's a reasonably short period at the end, but what we do intend to do is gather all the questions and then put them into our hub for consumer duty, and also utilise it in our communications This will all continue to evolve. People will ask us different questions next week that they might not have asked us today, because different firms will have different requirements, as the gentlemen have just said. So if I can ask Mark Greenwood to join us now. Mark is our Director of Compliance Services. So Mark has responsibility for our help desks and our authorisations team, and all things kind of, once policy have read what the rules, etc. should be, Mark and his team then implement what has to be done. So Mark, we want to in this session have a look at some of the questions that have come through the help desk. But before doing that, I think it's important to sort of just get a feel as what's the view been from firms that we've spoken to thus far about consumer duty, what they're thinking, what's their concerns, and then perhaps you can address some of the questions for me as well.
Yeah, I think it's fair to say when I've been on events and I've been speaking to advisors and business owners, we've had some interesting views, some of them possibly not broadcastable today, but the majority have tended to be quite polarized. Quite a few individuals I've spoken to said this is a real big FCA initiative. It's a real massive piece of work, the biggest thing since RDR 10 years ago. And then that's ranged from people saying, well, is this not just simply a new version of TCF? So we've had kind of those extreme views at one end and then every view in the middle. I guess like most of these things, the truth probably lies somewhere in the middle. We've had a lot of questions from firms, as you would expect, at the events, also with our compliance help desk. The policy statement and the finalised guidance, as Sandy and Richard alluded to before, was published on the 27th of July. We all locked ourselves in a room at 7 o'clock in the office, looking through that policy statement and finalised guidance, looking for any changes from the consultation. Then we issued a bulletin to firms later that day. On the back of that bulletin, one of the most common questions we were asked within a day or two of issuing that bulletin was, does consumer duty affect my firm? Quite a blunt question, quite an easy question for everyone to answer really on the help desk. The answer was yes, it applies to all financial services and products sold to retail clients, as Sandy and Richard touched on before. I think when you look at consumer duty, it's such a huge piece of work. It affects manufacturers, so the providers, the lenders, and the distributors. That's the good people watching today. And when you kind of pour through the paper, for me, what the FCA want to see here is firms prioritizing good outcomes, good consumer outcomes as a business objective. So getting the same kind of board attention that financial performance will get. So that's what permeates through the FCA's consumer duty papers for me. So that was a common question early on. As the days went by, we started to get a raft of different questions. What do I actually have to do? And when do I need to do it by? Sandy touched on this before. You know, the FCA gave with one hand and took with the other to a degree with this. They said, well, yeah, you've got this 3-month extension. We understand it might be a big piece of work for some firms, but what we don't want to see as a regulator is firms leaving things to the last minute. They saw a pattern of that with RDR, with TCF, with the senior managers and certification regime. So they put this kind of break in place, this deadline at the end of October, as in 2 months away, for firms to get their implementation plan in place. And if there's one thing that firms get from this session today, it's the importance of working through that gap analysis plan, working through that, highlight, as Sandy and Richard said, the areas, the good areas of the firm. If there's any gaps, work on them up to the rules going live at the end of July next year. So it's that, I feel they've given with one hand, took with the other. The key thing for firms, I would say, is when that gap analysis is published very shortly, work your way through that. We then had an interesting raft of questions, and I get the feeling this was on the back of some press articles that were published 3-4 weeks ago, and that was, is consumer duty just not a new version of treating customers fairly? We had quite a few firms ringing in asking that question. I guess the blunt answer is no, but even the FCA policy statement states there's significant overlap with TCF outcomes. For me, what Consumer Duty does is reinforce a lot of previous FCA messages and regulation like PROD, Senior Managers and Certification Regime, fair treatment of vulnerable customers, just to name a few. But when I've read the paper, for me, at the centre of Consumer Duty is quite a simple philosophy that firms should treat clients in a way they'd be wanting to be treated themselves. Richard touched on this before, and I think it's really important. I've been at SimplyBiz over 15 years now, and the vast majority of our firms, if not all, adopt that approach already. Where some firms may have challenges is assessing, testing, and evidencing that. And again, that's the real call to action there for that gap analysis plan. But I see, with the support that we can offer, firms, as the two gentlemen before have said, will be in a good place. I don't think there's any point in sugarcoating this. Consumer Duty will cause additional work for firms. There's no point in pretending otherwise. But again, the ethos of the firms we serve has always been to put the client at the center of everything. So the challenge for some may be evidencing, assessing and testing that. That is where that gap analysis will come crucial. As the weeks went by, when you looked at the questions that were coming into the compliance help desk, we could see that quite a lot of the firms now were reading and digesting the actual FCA papers, because rather than the kind of blunt questions that I've just touched on there, they started to become slightly more technical. So one of the questions, and I could see where this had come from, I think firms were reading the papers and saying, PROD, SM&CR, fair treatment of vulnerable customers, I'm already aware of this. My business is in a great position when it comes to these areas. But what's this value assessment thing? So then we got quite a few questions on, do value assessments need to be carried out at individual client level? Well, the answer to that is no. All value assessments are either done at product, service level, or based on different groups of clients. Firms don't need to do that at individual client level. But as Richard touched on before, everyone today knows the importance and the value of advice. And for me, when you have to determine if it's a fair value, when the FCA look at this, it's did it deliver a good consumer outcome? That's the whole emphasis of Consumer Duty. We know advice is valuable, but to determine whether it's a fair value, did it deliver a good consumer outcome? That shouldn't be too much of an issue, I would hope, for the huge majority of firms that we serve. I guess the question that's been asked periodically over the last 12 months, and certainly been asked since the 27th of July, is, you're my compliance service provider. What are you going to do to help and support me with this? Well, for the last 12 months plus, Consumer Duty has been a key area of focus for the regulatory teams at SimplyBiz. If you could see my diary and the amount of Consumer Duty meetings that I've been on in the last 12 months, you will be staggered. I think the first step when it comes to our support is that gap analysis plan. Again, we've got that date, only 2 months away, just over. Work through that plan. That is a key document and a key process to go through. But we also have a range of templates on our website already that support the different areas of Consumer Duty. We've got the Vulnerability Hub, the Senior Managers and Certification Regime Hub, our PROD guides, and a key document for me is our internal review guide. If you read Consumer Duty and you look at our internal review guide, it satisfies a lot of the requirements of Consumer Duty. So if you're not aware of that guide, it's an internal review guide. You can find it in the compliance area, in the policy section under regulatory guides. Again, I strongly recommend you have a look at that in line with the gap analysis plan. Looking at our wider support, the compliance updates on our learning and development events, professional development events, mortgage and protection events will solely focus on Consumer Duty. So if you've not been to one of our meetings for a while, strongly recommend you do so. full compliance update on consumer duty, and myself, Richard, Sandy, or Stephen Howard will be on site at the event to answer any specific consumer duty questions that you may have. We're also going to be running dedicated workshops, remote compliance consultancy, business consultancy. You'll hear a lot more about that shortly. But to find all our support and help on consumer duty, you need to visit our Consumer Duty Hub. That's in the compliance area, in the latest regulations section. We do love a hub at SimplyBiz. All our help and support is in there. But obviously, if you have any questions at all, please don't hesitate to contact our compliance help desk. They're on hand to answer any questions. And I strongly recommend with the events as well, if you've not been for a while, get yourself to an event, a full half-an-hour presentation on consumer duty, and a senior member of the regulatory team on hand all day to answer any questions that you may have.
Thank you, Mark. Very interesting to hear the questions that have been coming in. A few questions coming in the background around will the slides be available? We actually have very few slides, but yes, the slides can be made available, but this will also be able to be viewed afterwards as well. So if there was a bit that you were a listener was particularly interested in seeing, you can skip by some of the other bits and go back and hear what we said at those points as well. So that's just to answer that question, because a number of people have asked it. Another one about the gap analysis. We are anticipating that will be ready very early in September, which actually happens to be next week. So towards the end of next week, the beginning of the following week is the plan that will go, effectively to our designers and be pulled together. All the information's in there. We're just continuing to add to it. And then we're getting one-off questions, which, as I said, will sweep up elsewhere. There's somebody deals with international clients and expats. What do they need to do? So that kind of thing we will sweep up. We know there's going to be loads more stuff coming our way, and this will continue to evolve, as will our support. So thank you, Mark, for that. Very interesting and helpful. So I will see you at the end again.
Thank you, Janice.
And we are paying the electricity bill here in Glasgow. It's just the light goes off and on. If I don't move, the light goes off. So if I sit, which doesn't happen very often, that I sit and don't do anything but sit and not wave my hands or do something. So apologies for the light going off and on, but obviously it's this energy and saving lighting that we have as well. So I'd like to bring online now, without further ado, Stephen Howard. Stephen is the Head of Mortgage and Lending Intermediary Compliance Services. That's a bit of a mouthful to say the least.
Isn't it, Janice?
I'm sure we could find something simpler, but it's got to say what it is, and it's about mortgages and about lending. And as I said at the beginning, often the regulatory world, we sometimes think, oh, that doesn't apply to mortgages, doesn't apply to protection, doesn't apply to consumer credit. And it's really important that, all of our clients and members across the different business areas, they've got the relevant support that they need. So that's why Stephen's here to talk to us about the implications for these business areas. So really got sort of three key questions for you, Stephen. And the first one is, what kind of reviews and good practices can these types of firms complete in order to assist a smooth implementation of the rules?
Well, good morning, Janice. Good morning, everybody. At the risk of sounding like a broken record, I too am of the opinion that conscientious and well-run, robust, organised firms in this space, that are on top of the training and competence, the monitoring and supervision, are well placed to deal with consumer duty. Clearly, there are going to be areas to understand in more depth and action points to put in place. So the first, good practice point that I would really emphasize is now is the time for senior managers to start talking about consumer duty if you've not done so already. Obviously, it's sole traders, different kettle of fish. You need to have a plan of action for yourselves. But anybody with a number of senior managers need to get around the table and start talking about how they're going to implement and deal with this. As has been mentioned by Mark, Ricky and Sandy, we've got the gap analysis on the way. That's certainly going to assist with that. But, we're going to have specific mortgage and protection and consumer credit templates for this. So, you know, there's a number of good activities that you can do at the moment. Really get to grips with your internal advice process. So, you know, if that's something you've not looked at for a while, now might be the time to go and have another look at it. How you interact with customers, you know, how you get from A to B in the advice chain, thinking about the 3 cross-cutting rules. Those are acting in good faith towards retail customers, avoiding foreseeable harm to retail customers, and enabling and supporting retail customers to pursue their financial objectives. So take time to understand how you do that in the chain. It might require some more training or some refresher training with your staff and with your advisors, especially if you've got you know, a number within your business. Have a think about the advice fees. You know, if you've got a firm that charges advice fees, broker fees, think about how you've got to that decision of what to charge. You know, do they differ between normal residential, perhaps, to adverse, to debt consolidation, to equity release later life, or second charges? You know, does it make sense on how you've arrived at that decision? And it's a good idea as well to document your route to decide how you've got to charge the charges that you do. You know, think about price and value. It's a core element of consumer duty outcomes. So, you know, that's one thing. Another thing you can be doing. Think about your internal compliance procedures. You know, we've got a document on the compliance section of the website to help you make sure that you're regularly covering off your compliance activities. You know, it's in a spreadsheet that you can mark throughout the year to highlight when things are due to be completed. You know, if you're saying you're going to do something like KPIs, one-to-ones, file checks, make sure that you're achieving those standards that you've set out, and that's usually within your training and competence plan. So make sure you're delivering on those standards. Consumer duty will require firms to collect and monitor and understand management information, especially around good outcomes to retail customers. You know, the FCA won't dictate what you've got to collect and monitor, you know, but it'll all be down to this individual size of the firm and the types of customers that you have. But now might be a good opportunity to go and have a look at the management information that you collect and see whether that needs to be amended, especially maybe on feedback from customers to confirm good outcomes. You know, and then so take a look at your new business register and your KPI templates. Are you collecting enough relevant information to be able to confirm these kind of outcomes? Finally, you know, think about the way that you review and communicate with your customers. You know, another outcome is around consumer understanding and consumer support. So, you know, does everybody within your business understand vulnerability? You know, it might be a good opportunity to go back and do some refresher training, some work on vulnerability, because the FCA are very, very keen, especially within the consumer duty final report, to make sure that good outcomes are being achieved in this area as well. So, you know, we've got lots of tools to help you with this. We've got the vulnerability hub, and also if you're active in the later life space, we've linked up with something called Commentis now, which is an industry-leading tool to help you assess vulnerability. So, on the face of it, there just some very, very easy wins, I think, just to get on the front foot with consumer duty for mortgage protection consumer credit firms.
I think some of these things as well, Stephen, it's fair that they're kind of across the board. It's about management information, it's about evidence, it's about understanding your business. And, you know, a lot of people know their businesses, but it's just back to what we keep saying, is it written down? Could somebody understand? Would a customer say, yeah, they understand, etc. as well? So that's really, really helpful. Thank you for that. Another really big one, which again is across the board, but I think particularly in the mortgage protection and consumer credit area. As we know, Consumer Duty brings along customer principle 12, so a firm must act to deliver good outcomes for retail customers. And one of the three cross-cutting rules is to avoid causing foreseeable harm to retail customers. I think this is really, really important, and we're having a lot of conversations. Obviously, you're included with all of us in this. But what does that mean? What's the implication of that? Avoid causing foreseeable harm to retail customers.
Yeah, and that's a question I think we've seen on a regular basis and they're coming through now. What do good customer outcomes look like? What is a good customer outcome, especially in mortgage protection, consumer credit? Well, I'm very, very confident that the vast majority of our members in this space, they're working very, very hard with customers, to achieve good outcomes already, especially when we're helping clients get the first home, purchase new houses, review existing rates, tackling existing debt, and in the protection area, ensuring that loans are appropriate and families are appropriately covered. But good outcomes in this area can be linked, I think, to culture within a firm. What is the culture within the firm? And if that's universally positive, then that's going to lead to good outcomes. Take time to ensure that your client understands how you get remunerated. That might lead you back to have a look at your advice process. A good outcome is when the client understands how you get paid and how much it's going to cost them. So maybe have a look back for that. If your firm's promised to review a client, when the initial rate has come to an end, maybe in 2 or probably more likely at the moment 5 years, do you have the appropriate back office solution systems in place to highlight it, to make sure that the review takes place and that clients don't move on to a lender's standard variable rate? Now, that's a good outcome, and it's also avoiding the foreseeable harm via increased payments. So that's another good one. This isn't going to be exhaustive, but putting clients in an informed position during the advice process so that strong choices can be made. And what I mean by that is, if you're consolidating existing debt for a client within a remortgage, analyze each piece of debt that they're getting, the consolidating, because some parts of that existing debt might not be in the client's best interest to move. So, place clients in an informed position. Additionally, existing critical illness policies, certainly ones that were written, a number of years back, will have additional benefits to new plans. So analyze what you got, put the client in an informed position about it. That's a good outcome. Making sure that clients, use free or complimentary services from a lender, like especially fees-free solicitors in a remortgage. We've heard of of members getting into trouble with lenders when they've not universally used those free services for customers because it's not a good outcome in a lot of cases. So because they're not benefiting from that. But a real big one that I think we're going to really need to, work hard to get across in the next 12 months is, if you're a mortgage advisor and you're working hard to get a loan for a client, you've got to have conversations about protecting that loan, protecting the family. And if you don't feel comfortable about doing that, do you have appropriate signposts in place to point the client in the direction of good advice in this area? Because clearly, by talking about protection or sending them to somebody who can do that, it's going to avoid potential harm, foreseeable harm. If in the future there's a death or a critical illness or a problem with working. So obviously not exhaustive there, but some I would say practical indicators of what good outcomes can look like. Especially in cost of living has been mentioned in Consumer Duty as well. So that one about moving on to standard variable rates and making sure that people end up with a prime lender, prime rate, instead of a subprime, because we hear stories about clients being put with a subprime lender when they could have accessed a prime lender. These are all good outcomes.
I know, exactly. And this is where it flows through all of our business as well, doesn't it? From a file, checking the quality of advice. We again are looking at our standards. Are there some things that we maybe need to tighten up? If you're using our advice quality service, you might think, oh, nobody's mentioned that to me before. But there's every chance it's not been mentioned because it's maybe not quite had the focus that consumer duty is now driving. And obviously, as a compliance service provider, that goes across all of our services, whether it be from visits, file checking, etc.
Yeah.
We will be doing all that work in the background to make sure that we are highlighting these things and helping the firms as well. Conscious of trying to keep us on time, Stephen, so you've got a very quick last question, if that's all right. We've had a lot of queries, as we've spoken about before, and it's really around broker fees and whether existing charges can be maintained in a post-consumer duty world. Do you have any thoughts or feedback on that?
Yeah, very quickly. Just can I just highlight file checks? Very, very important in this whole process. The regulator isn't a price regulator, so they're not going to dictate what you charge. But you've got to think about, have I delivered on what I promised? Has the client had their fair value from that? And then it would be down to a client to work out whether to go to competitors based on whether your fees are clear, fair, understandable, and that's what I'd say about that. It's for individual firms to decide. What I would say is that if your firm is charging fees and you've got a number of advisors in your firm, clearly consistent application of those fees is going to be essential as part of consumer duty. It's an area that we see firms get wrong. One advisor won't charge a fee within a firm whilst another one does, and some all points in between. It's it might need some additional coaching, retraining in order to get confidence in applying those fees consistently within firms, because it's all down to outcomes. If you deal with one person in the firm, you're going to get a different outcome than the other chap that perhaps charges differently, or lady that charges differently. So, I think feedback might make a big comeback in the next 12 months as well, about understanding fees. So those are some quick points on that, and I'm sure other people in today's presentation will expand on that.
Excellent. Thank you very much, Stephen. I think, for our audience, I think all of us could spend all day speaking to you about each of these sections, or we could probably do one a day for a whole week. So who knows what will come in the future, but there will certainly more of these things and more information coming out. So thank you very much for that, Stephen.
No problem.
Very helpful from that perspective. If I can ask Karl DInes to join us. Karl is our Head of Business Consultancy, and Karl is also the face of consumer duty for us in the press. Now, we didn't do a beauty parade, but he was picked for his good looks and his knowledge in this area as well. So you're probably seeing Karl's face, whether it be through LinkedIn or in the press, etc. as well. So as Head of Business Consultancy, this is an area very close to Karl's heart, particularly in the sort of wealth and investment space. So having now looked at mortgage protection in the consumer credit markets, we now want to look at investment firms from a resident expert in this area. So welcome, Karl. And thank you for jumping in at the beginning of this event to help me out when things were going wrong. Okay, so the first question to you is, some say that the duty is as influential as RDR. Is that the case, and why? I'm going to add a little bit onto that, because a couple of questions have also come in saying, but is it really TCF, and what's the difference between TCF? And I guess there's a thing, what's the difference between TCF? What's the difference between RDR? Is it as influential? So overall, if you could kick off with that question for us, please.
Yeah, if any of you remember RDR and went through it, it was an interesting time because the regulator gave us quite a lead in on that, on this whole change on how firms were remunerated. And what I found was firms didn't really do much about it until it was due at the beginning of whatever year it was in January. So there was this mad rush to get the RDR sorted around about October, November and going into December. And I think what the regulator is doing with this piece of work, which is obviously just as big, is to say, hang on a minute, let us make sure we monitor this more closely. Hence the reason why we have the implementation plan deadline at the end of October. I do believe it is just as big, but as Ricky mentioned earlier on, a lot of it is probably already formed within an IFA's practice when we look at vulnerability, treating customers fairly, and all that sort of thing. Ricky also highlighted consumer understanding. That's really important because both RDR and the consumer duty really sort of tackle the core of an advisor's business, which is the advice process and how they interact with clients. So the 4 outcomes are so obviously built around that. And Ricky was right by highlighting the consumer understanding. Mark also mentioned that the FCA will be monitoring this, and we've seen evidence of that with the fact that they want the implementation plan in place. And this is the reason why we come prepared with the gap analysis to help with that process. So all in all, what we got is a big piece of legislation coming down from the regulator, but a lot of this stuff is certainly already in part embedded within the firm. It's just the demonstrating it and getting it documented. Is it bigger than TCF? Yes, it is. TCF certainly is a theme that runs right the way through the consumer duty, as does vulnerability as well. So there's a couple of key areas which are consistently mentioned right the way through the FG. But it's certainly something that firms need to pay particular attention to, simply because the regulator can, on request, demand to see how you're complying with the consumer duty. What does that mean? That means getting it documented.
Absolutely. Thank you for that. Again, back to documentation, a couple of questions come in, the same as the guide, separate from the gap analysis. Effectively, that will have an overarching piece, which will give you the background, the outcomes, etc. And then the gap analysis, there'll be separate gap analysis, whether it's investment, mortgage, protection, firm that people have. So just answer that question when we're talking about, where we start from. From your experience, Karl, because some firms have already, engaged our service from a bespoke perspective. Are there any areas within the duty that would appear to be of particular concern?
Good question. I ran a webinar very similar to this pre-finalised guidance, and we brought up the four outcomes. 53% of the attendees to that workshop basically said that the one that was concerning the most was price and value, and that can be split basically into 2 areas, which is looking at the price and the value of the advice solution that you put before a client, which is basically looking at the value assessment from the manufacturers for the platforms, the products and the investment solutions that you're using. And you can tie that up with aggregate charging from MiFID II as well. So firms will have a pretty good handle on being able to manage the price and value of their recommended solution. But what's concerning firms more is, how do I measure the price and value of my service to my clients, because you are distributors distributing to retail clients, and your service is your advice process. And that's the one theme that seems to be running through. There was a couple of questions that came in, which are jotted down here as well. There's a question from John, which basically said, does this mean we have to change our client agreement? Might do. It really depends on whether you've done a full assessment to ensure that your charges are clear and are fair, and obviously follow the price and value outcome. That may mean you make some adjustments to it, and firms that we've been dealing with have come to that same conclusion. But it really is down to an individual firm and how to do this. And you've also got to remember, as Mark mentioned earlier, what we're talking about here is not individually to clients, but in the round. So this is at a higher level, saying generally does our charging structure match our clients or segments of our clients So we've got to look at it from that in the round perspective. There was another question came in from James here as well, which is saying, does the gap analysis document allow us to drill down to make these value assessments? What I can say is firms that work with us, we do a whole piece around the price and value of your services. So we have got the means to actually create that for you and to give you price and value MI in relation to your service to your clients. So if you want to drill down even further, then certainly we can do that.
Yeah, quite a few questions around value assessment. I think what today will help drive the other events and webinars and support that we feel we need to give as well, because a number of questions coming in that area also. So what are the top 3 areas from consumer duty? 1, 2, 3.
Yeah, I would say looking at deadlines, looking at accountability and proportionality. Sandy mentioned the deadlines. I think Mark mentioned it as well. We've got the implementation plan, which is due at the end of October. And then we've got a final deadline for the consumer duty on the 31st of July next year. That gives us 11 months. 11 months when you look at the size of it and you start building it and you start looking at all the different areas and nuances within your business. 11 months isn't long to get this project plan put in place. I mean, the consumer duty, for instance, asks firms to put themselves in the shoes of the consumer. What we're doing is we're putting ourselves in the advisor's shoe. And we're looking at how we would actually build it if we were a firm. And once you start going down to it in more detail, Paul might pick up on this after me, you'll find out that it opens other doors and there's other stuff that you need to bring in to make it really, really robust. So 11 months for a deadline, you know, get going with it now. The accountability side basically makes the consumer duty enforceable because it comes under SM&CR. So if things are not going the way they should be from the regulator's point of view, they know who to talk to within an organisation to find out the reasons why. And the last one, proportionality. Sandy mentioned it when he was looking at reasonableness and proportionality. So firms would have to comply with the consumer duty and take into consideration their capability and their capacity. So a sole trader would comply with it very, very differently to, say, a large national organisation or indeed a manufacturer. So the 3 takeaways for me is deadline, accountability and proportionality.
Thank you very much. Well summed up there. What would you also say are the key steps firms should take to make sure they embed the duty? So we've heard about implementation, but how can you go about actually embedding it? So there's the initial steps, and this won't all happen overnight, and that's why it's important to get on the journey now, etc. as well. But how will they embed it in their business?
Good question. Well, another great question, because we're all at that stage now where we've all absorbed the consumer duty. And then the next question is, right, what we're going to do about it and how we're going to manage this and how we're going to put it into practice within our businesses. Because the regulator is very good at saying, yes, this is how you should be treating your clients. This is how you should be looking at vulnerability. But then they leave it open-ended. And we've seen a few questions on this, which says, well, how do we measure good outcomes? What do we do? And then the regulator goes, well, basically, you need to do it in whatever way you see fit within your business. So it's a bit open-ended. This is the reason why we're putting ourselves in advisors' shoes in order to build that. So the implementation plan and the gap analysis is great stuff that we've got from Ricky and his team. What we're doing in the business consultancy side is saying, what would this document look like if it was owned by an advisor and they had to present it to the regulator? So we're looking at building an implementation plan with key steps which go right the way through the process and the end result being fully embedded. So you need to take the 4 outcomes into consideration in the cross-cutting rules, but you also need to look at what sits under Principle 12, which is all this idea of a change of culture within a firm, and how would you do that? An example of a change of culture to really embed something like the consumer duty would be to have an employee manual that all employees have to read and understand, centred, specifically around the consumer duty. Maybe that forms part of an induction process. Now, all these little points here, what we're highlighting is the fine detail that everyone is going to start to develop when they're looking at really getting to grips with the consumer duty. We're just at the start of it, gap analysis and all that sort of stuff is brilliant. What we need to do now is go, well, how and why do we do exactly that, and what do we need to do to get to it? And that's what we plan to do with the business consultancy side, is to actually do that, is to actually really go down and get it embedded in driving the culture within a firm. And the most important thing is obviously making it workable and making it evidenced. So if the regulator asks, then you can show exactly what you're doing on that.
Absolutely. Thank you for that, Karl. Obviously for our audience, from a support perspective, we will be providing everything that's required from a core perspective, through the hub, through our visits, through other things you'll hear about shortly. But there is the opportunity, if you wish to engage us separately to carry out some of the tasks for you, then that can be done as well. So it's great to have that. Another question had come in just around different services, and it just brings it to mind. Somebody said, should I change my suitability report? Would that make sense? And actually, there's a project ongoing anyway in relation to suitability reports. They're very subjective. People, some like an appendix and some like a big long story and all the rest of it. But we are currently looking at suitability reports and how they should look, and also in light of consumer duty. So that's just to answer another question along there as well. So thank you very much for that, Karl. Nice to see your face again, and we'll see you very soon at the end of the session. All right, thank you. So we have heard a fair bit of detail and some practical application of the support, etc. So let's look at a bit closer with the leaders of our consultancy services. We have Jennifer Peaty, our Head of Regulatory Consultancy, and also Paul Bruns, the Director of Consultancy Services. So a few questions put to you guys. I think you're taking them maybe in turn from me. So hopefully you can go live and we'll hear you okay. So from a practical angle, what do firms need to do now, in what order as well?
Thanks, Janice. I think it's important not to underestimate the breadth of work that will need to be undertaken over the next 12 months to be able to evidence those good outcomes. In line with what the regulator is looking for. So how do you do that? Starting point is probably accountability. That's fundamental. Who within the firm is going to be responsible for making sure that the consumer duty is implemented? So there needs to be a decision made to ensure that a suitably senior individual within a firm is made responsible, accountable for that, and then that should follow through into statements of responsibility, etc. Following that, it would be wise to undertake some sort of stakeholder analysis, have an exercise to look at, which people around the business, who are the relevant key stakeholders in the business to be involved in the work that needs to be completed. And then there's the implementation plan. That needs to be drafted, presented to the board for challenge and scrutiny prior to the end of October. So they're really the key actions to focus on initially.
Yeah, just adding on to that, Janice, as well, dependent on the size of firms, talked about proportionality right the way through. I think Sandy started it off. So dependent on the size of firm, the level of activity will be different. So larger firms will already have a formal board structure, structured meetings in place, and a process for sign off. Whether in smaller firms, it will be the senior manager that's appointed to manage consumer duty that will be responsible for the implementation. The implementation is obviously going to follow on from the gap analysis and then into the project plan over the next 12 months. What's really important is that in the finalised guidance, it does state that firms should expect to share their implementation plan with the regulator. So it's really vital that that is actually produced and it can be evidenced, should the FCA request it.
That just dropped out slightly for me, Jennifer. So just in case it dropped out for everybody else as well, you said about just before presenting it to the regulator, you said something there. Was it about the preparation of the plan and the ability to present?
Yeah, so the plan will basically follow on from the gap analysis. But because the plan's supposed to be in place prior to the end of October, it's really important that, that gets produced in evidence soon. We don't know at what stage the regulator might follow up on this. Yeah. They may do a sort of spot check exercise and ask a certain amount of firms to produce, the plans. So we just have to be ready and have them in place.
And I would suspect, logic would tell you that will go from small firms to medium-sized firms to very large firms. They're not just going to go after one category.
No.
I think they're going to look across the board as to who's doing what, and is it meeting the requirements and their expectations as well. I mean, the next question is an important one, I think, because a lot of these things are pinned around the sort of, is it just a compliance task within a firm? So does this purely sit with the compliance team, or how wide? And again, this will depend, and the answer will be the same, but the application will be different for our firms depending on the size of them. So the simplest way is it purely a compliance task within a firm?
No, I think when you read through the consumer duty guidance, and there is a lot of it, compliance will play an important part. It will be a key driver in the implementation of the duty. But for it to be successful, it's going to have input from many different parts of the business. Things like the consumer understanding outcome, to be able to evidence that, is going to rely heavily on engagement with any marketing part of the business, the people who produce customer communications, campaigns, financial promotions, working with compliance who sign them off from a compliance perspective, but also I think one of the guys earlier said about being in the shoes of the customer. How else do you do that? Do you look at these communications from the angle of the customer rather than just from the subject matter experts to get that understanding? Furthermore, to make sure it's fully embedded within a business, really to look at how you would do that. How do you embed something within a business? So going from the very start of, somebody's role profile, job description, making sure that there's some reference to the consumer duty and how that role supports meeting those outcomes within the consumer duty. Then going through things like objectives, appraisals. So from an HR people perspective within firms, that's really important. Training departments within businesses, if firms have induction process, annual refresher training for individuals, where does consumer duty come within that? So getting those behaviours right within firms, these key areas. So it does link up. If you laid out everything that effectively needs to be done with the implementation plan, there's lots of different strands of activity that do bring in different parts of the business. It's not just compliance. It needs to go across all the different parts of the business to really work.
And again, Janice, there, proportionality does apply. Some firms may outsource these types of activities with regards to the marketing, financial promotions, even HR to a certain perspective. So it's important that you engage all stakeholders in this process, especially if you're looking at outsourcing, or it may be dependent on how many senior managers are in the firm, that these are part of the other responsibilities under SM&CR. So you'll find that they're already noted in statements of responsibility. It's a really good time to actually revisit the statements of responsibility. We drafted them way back. Here's who's taking the prescribed, who's taking the other responsibilities, and actually now it's going to be who's taking consumer duty, and do we want to rejig some of these responsibilities, because consumer duties is a very big overarching responsibility for a senior manager to take. So it might be then you proportionally look at what they're already responsible for and delegate that out, between other senior managers in the firm. Absolutely.
I mean, it makes total sense, and a great point there, obviously, about the other areas that you may outsource as a business, etc. I think it's dead easy in doing these things to sort of get caught down. It's quite negative. What do I need to do? Oh my God, I've got this to do, I've got that to do, I've got that. There's a lot of good stuff's going to come out of this. I think businesses, and we all need that sometimes to step back from how we do it at the moment and say, right, let's have a look at that. And I think this is a real opportunity, and it's a bit like, as we said, even with COVID, there was a lot of sad and terrible things, but there was good things came out of that as well that changed the world and made us progress quicker, etc. And I think this is I'm pinning it to obviously COVID, but a similar process in the sense that initially you're like, oh dear me, how much have I got to do? But actually on reflection, you'll be grateful that you did it all, and you have a much better, clearer insight and evidence of what you're doing. So we've heard from Karl just in terms of what he thinks the key focus is. From a consultancy perspective, for you guys, what do you believe is the sort of key focuses for our firms to consider?
MI, and MI. So one of the biggest challenges is the monitoring of MI. Steve had mentioned there about what have you got in place just now? Are you engaging with a back office provider? Are you using, template registers? So it's really important now to look at, okay, what MI are we recording and how effective is it? How are we measuring it and monitoring it? What's been tracked and does it reflect what's expected under consumer duty? Sandy and Ricky have said as well, part of the gap analysis is going to identify what works well within the firm. So again, as much as we're saying that this all seems quite daunting, a lot of firms will find that they've got measures in place. It just might be adding those extra bits on that reflect what's required under the duty. So really the robust MI is there to evidence that the firm is meeting good consumer outcomes. Some of the examples Steve had mentioned about file review output, so that's not just the output, that's the evidence of the remedial actions in place.
Yeah.
Often that you can sort of show that you've got the output, that's great, and we've had 10% of files checked, etc. But actually, what's happened with the remedial action? Has there been a root cause analysis, completed to look at certain areas? Is it driven from the advice process? Is it the advisor themselves? Is it a certain type of business? And other types of MI, just as examples, would be like your complaints data. Again, have you taken it that step further? You've not just recorded it in a spreadsheet. Has there been a root cause analysis? Have you looked at all the circumstances around it? And also things like persistency and also client feedback. So testing is going to be key going forward, and testing the effectiveness of communications with customers is another one, especially under the sort of appropriateness of the channels that are being used. We're now in the digital age, we're doing digital marketing of communications, but does that fit with the different channels and the different types of customers that you're dealing with?
Yeah, and another thing within our business we're looking at to support our members and clients is around the technology piece. How do they gather that MI? There's a lot of data kicking about, but how does it actually read into management information that tells the actual story? Lots of spreadsheets kicking about, lots of things written down or known in somebody's head, but not actually then able to be evidenced. So definitely, as you say, MI for sure.
I think it's also, Janice, it's also important not to forget, and the guys have mentioned it a few times today, client vulnerability. When you go through the guidance, vulnerability, client vulnerability, it's a constant theme through everything, every section, every chapter. I very much doubt there's a page other than the front page within the guidance that doesn't reference client vulnerability. So firms making sure, now you could start with that now. We've got our policies in place, we've got our procedures in place, we know how to identify vulnerable clients, particularly now we've got the cost of living issue, we've got the issues with inflation. Clients become vulnerable quicker now, and so that might be more fluid, more transient in terms of people being recognised as being vulnerable customers. So what's being done to make sure those reviews for clients are actually looking back at income expenditure to see how people's positions are changing. And the FCA did publish an update in June, I think, on the treatment of vulnerable customers. So we'd recommend people reference that as part of their consumer duty work. And we're actually holding, I think, the first week in October, a vulnerable client week. So we're actually doing something to promote that as well. So it's really key. Vulnerable customers, the fair treatment of vulnerable customers sits right alongside.
Absolutely, and we're updating the hub, we're reviewing the hub, with anything new, anything else that's come along as well. So that's excellent. I mean, we've heard today about support from our help desk, support through events, etc. as well. From a consultancy perspective, so predominantly our on-site visits, remote visits, etc. What sort of support can we expect from your teams?
Lots of support. So we're actually going to have a dedicated consumer duty health check. So this is a sort of remote half-day visit with a dedicated consultant, and it will basically take you through the key areas of the business that you should be looking at as part of the duty. It'll help to identify actions on the back of that, which will be key in putting into your implementation plan, and your project plan. Also on site with existing visits that have been booked, or should anybody want to book a visit just to purely cover consumer duty. We've got support days the consultants can do. So we can actually help with the gap analysis, you know, so firms can obviously download it and do it themselves. Sometimes, you know, it's good to talk this through with another party external to the firm, especially when firms have got existing consultants, because they know and understand the business and they've probably got a good idea where some of the kind of actions are already. So that'll help the senior manager, you know, to draft the implementation plan. And also the workshops, so we're going to be running consumer duty workshops across October. Consultants will be available on an ongoing basis as well to assist with the implementation. So there's so many opportunities. You've mentioned already we've got the dedicated consumer duty hub. So there's going to be so much available. I think the great thing is that between all the teams that we have, so Mark had mentioned about, you know, the technical help desk, sometimes it'll just be establishing what type of support is, you know, appropriate for that firm, you know, what level of engagement are they looking for? You know, they're looking to do it themselves. Are they looking for a bit of hand holding? So I think you've managed to kind of cover all bases on that. So yeah, we're ready to go.
Excellent. Mr. Bruns, anything to add to that?
Bring it on.
No, that says it all. I think, again, it's probably fair to say what we're trying to do, which we did with SM&CR, excuse me, is to, you know, tier our services in the sense that some people do want more support and want to pay for that support, but that does not take away the fact that we will provide the support you require within the core of the membership fee that you pay. You know, there'd be a bit more work that you'll need to do, you know, but if you want, as Jennifer says, us to hold your hand a bit more, that is possible. If you want to take it to the nth degree and have, you know, bespoke sessions and days, whether it be training or analysis, value assessment, then that can be arranged as well. And, you know, we'll clearly work with you on that. So it's having that spectrum of services that we can deliver depending on individuals' needs. So thank you very much for that. Jennifer and Paul, if I could call on the lovely Louise to bring up the slides for me again, that would be perfect, Louise, just before we go on to a couple of other things. Thank you for that. So this is really just a little bit of a summary to show you about, you know, to sort of summarise where we've got to in terms of the support. There are key dates around mortgage meetings. There's another advice show at the end of September, and there'll be a session on that that will focus on consumer duty. We've got our learning and development events, which are predominantly SimplyBiz members attend that. We have our professional development events, which are the Compliance First events. So they are Scotland, North East England and Northern Ireland. The learning and development events are really the rest of the UK. We've got the protection roadshows as well. So lots of things happening in that area. Obviously, a lot of these events as well, they will have the session on consumer duty, but also very informative in terms of what some of the providers and partners, etc., are saying as well. So visit the member and client website for more details and to book your place. And then the next slide is really just around the sort of information and support. That's what the page looks like for SimplyBiz. Very similar, if not almost identical, barring the sort of colours for the compliance website as well. As your Compliance First one, as you can see there, we've got what we've said in the press, technical guides, the heavy stuff, understanding things. So we will be continuing to add information to that, but we will be communicating out and keeping you informed of what we're doing. And we've then got overall a sort of summary of the support that we've got. And we're next slide, please. Louise, sorry, let me step back. I was too quick. Sorry, Louise, back the way one. Sorry, my apologies. Getting carried away and keeping an eye on the clock at the same time. We're going to be carrying out workshops that were mentioned as well. These workshops will be chargeable workshops, but the idea being there'll only be 20 people, 25 absolute maximum attending them. This will be about creating the plan that works for you. So it's having that more tailored input to what you want to do. And as I keep saying, I can't re-emphasize enough, the information will be available there in the core of our services. You know, so it's your choice. This is about choice as to how you wish to engage us and how much support you would like. These events, again, will be split out in the sense the first hour will be the overarching piece, but a real deep dive. I mean, we've covered a lot today. You know, and even in an hour, it's a lot to cover, but we will have much more of a deep dive into the principles, the requirements, but then the teams will split out, and it will split out into investment, split out into mortgage. So you will then pick which session you would like to attend. But as I say, there'll be small dedicated sessions, and it's about creating the plan that works for you. So Louise, if you don't mind now, the summary one would be perfect. Thank you. Yeah, and this one really is to show you really just the scope and the scale, and we will continue to add to this as well. So we've got the advice show at the moment, the policy guidance and gap analysis is ongoing. September, we've got the wealth advice show I've mentioned, professional development events, learning development events, mortgage meetings. The bespoke workshops are then in October. We've already heard Vulnerability Week will be in that time as well. So the dates will come out shortly for there. And it really just continues to go through. But the theme throughout is the remote consultancies there, the business consultancies there, and we will continue to build what we're doing. And obviously your access to the help desk and the hub will be there throughout. The ability to speak to somebody about your individual scenarios, etc. There's also, somebody's put a question in saying it'd be really good to have best practice meetings. Now, previously, we used to run best practice meetings through the New Model Business Academy. That's not something we've done recently, but it's some food for thought, certainly, if there's an appetite for that kind of thing as well. So I'd like to hear from you if that was the case. We are going to go into a question and answer session. I am conscious that we said we would finish at past. So before we go into that session, on your screen, you'll see the help desk numbers. I'm sure you can access them anyway, but we've put a poll on here. So if you don't want to stay or don't have time to stay for the question and answer session, we thought if we put the poll up and just let us know if you'd like to attend another event, would you like to go to the next advice show? Is a bespoke workshop of interest to you? Just so we can come back to you and follow up on these points and collate that information through the poll. So if you could complete the poll, we'll just leave that up for probably a minute, because when you're online, a minute seems like ages. And I'm sure you can quite quickly read through that. And then we'll bring all of my colleagues back on in order to take some of the questions that have arisen today. So I will stop talking for about 30 seconds to let you think and to complete the poll for us, please. I think, Louise, we can maybe close that off if you think it's appropriate, from your events experience, if we should keep it up a little while longer, or if we can just close that down now and take some of the questions and answers, and give the answers, obviously. We're not taking it down, so that's fine. Another 20 seconds or so will be perfect. All right, I think we're now going to just take the poll down. The contact details are on that slide there. As I say, the slides will be put onto our website. If anybody wants the information, we can send that out to you as well. And if we can bring everybody live, Louise, then that would be great. Or they may be able to bring themselves live as well by clicking put video on, put sound on, and then that'll be us. Excellent. So I now see everybody there. A few people have left us, and that's fine. We didn't want to be discourteous and carry on over 11:30. When we'd said that, and as I say, this will be recorded, and you can look at just the question and answer piece as well. So a few questions that have come through. One's come through saying, how does it, and you guys can all put your hand up, whoever wants to answer it, but how does this impact pension, life, and lenders? the actual providers, how's the consumer duty going to impact them? We're focusing very much on the intermediary side and how it impacts their firms, but a bit of concern shown by one of our clients just in terms of, administration is very poor from some of the providers, etc. Well, could we or should we see some benefits? Stephen, that looks like your hand up.
No, I was just closing the blind.
Oh, really? Right, so if somebody else put their hand up, who wants to take it? Richard, you speak a lot to the partners and intermediaries.
Yeah, let's make no bones about it. It's going to be really challenging for the manufacturers, the pension providers, the lenders, etc. In the same way of everything we've spoken about for the firms that we look after, manufacturers are going to do exactly the same themselves. And a lot of the time, the manufacturers aren't seeing the end client, and they're having to make some big judgments and some big calls. And one of the things they'll have to do is their own value assessments. Do the products that they offer provide value to the end consumer? And they will have to document how they've carried out that assessment to reach that particular decision. It won't be the responsibility of then the advice firm to make a judgment on that. They take that as their value. But it'll certainly be interesting to see how manufacturers do promote some of that information about the costs and the value of what that service is actually providing the client. So, and I think for all this to be worthwhile, what we're going to have to see is, the regulator actually go into firms. And it's all well and good asking questions of what a firm's doing, but they really need to go into firms and they're going to have a bit of teeth, because, listen, make no bones about saying this either, that the regulator's stock at the minute in time is pretty low. But I think there's a fantastic opportunity to drive real improvements within the markets. I think everyone would want to see that, because a lot of the time, firms get stigmatized with the reputation of the bad few, and we want to improve it, and we need the regulator to go out and have some teeth and to really identify and challenge those firms which aren't delivering the outcomes of this consumer duty. As I say, from the firms that I speak to and from the firms that I see, I think, these are the key values they have throughout the business. Documenting in terms of every compliance aspect is always incredibly difficult, challenging, and I think that's where the problems will lie. But in terms of what they're actually delivering to the end clients, I don't expect to see a massive change, but I think within an industry, there will be certainly some seismic changes, which will be interesting to see those developments.
Absolutely. Now, I'm right in saying there's a slightly different timeline for the manufacturers as well. Do you want to explain that?
Yeah, this is about closed-end products, so this doesn't have any relevance to our firms. But where you've got a firm where they're not offering the products anymore, they've got an extension by 12 months in order to carry out the full implementation of the consumer duty. So it's relevant to providers whether they're offering current products or whether there's a kind of a closed market for their products.
Yeah, and if they get the same time scale for their assessment and value, so that all lines the same. So again, just to sort of clarify that point as well. So yeah, that's always an interesting one. Also a question here, which this time I think will be for you, Stephen Howard, but how would you evidence compliance in the commercial asset finance space?
Where would you, sorry, just repeat that, where
would you evidence compliance, or how would you evidence compliance in the commercial asset finance, please?
Well, again, I would say through collection of management information and being able to show that you're collecting it and thinking about what that's telling you about your dealings with your customers. At the end of the day, it's all about the good outcomes for the customer. So it's for the individual firm to decide what levels of information they collect. I would say they can't, at this moment in time, I don't know whether you're nodding your head there, Sandy. I don't know whether you've anything to add on this, but it all comes, like as Jennifer said, it all comes down to MI collection, and that's a big area that I would say management needs to look at.
Yeah, I totally agree. All I was going to add was that actually it was a bit controversial when you read the policy statement, the idea that consumer duty could extend on to businesses, in fact. But the regulator took the view that actually where that business is within the regulatory perimeter, so, you know, you're providing services that are, you know, credit related regulated activities to that business, then they do benefit from the duty. And as Stephen says, you know, this is absolutely relevant to that business that's in the regulatory perimeter, and MI is a great way, you know, to record that, as is potential for vulnerability, you know, with business owners that are perhaps requiring finance, you know, and also the way you talk about the options that are available. So
I think there's no hiding place, is it? You know, I think there's an element, I'm a sole trader, does it apply to me? Yes. I'm in commercial space, does it apply to me? Yes. You know, it's just, or commercial finance, should I say, it's like, yes, it applies. I think it's just to reiterate what we're saying, it's about the proportionality of it, the relevance of it, and, you know, it's about people evidencing their own businesses, etc. as well. On a different tack, this will be one for Jennifer or Paul. There's been a couple of questions come up saying, I have a visit shortly. Will the visit that I have shortly include anything in relation to consumer duty?
As soon as the gap analysis is out, the consultants will be using that actively in meetings. So it might be that the firm's already completed it by the time they get there. It might be that they've looked at it, but they need a steer. So again, all the consultants will be actively using the gap analysis, and we'll just be able to sort of help them identify actions, you know, and with the view of putting together the implementation plan. So obviously the firm has to take responsibility for that, but absolutely we'll be there on site or in the remote visits as well to give a steer on this.
Yeah, so I guess just to be clear again to our audience, so if you have existing visits with us, it can be part of that. It can be all of that if you want it to be, but if you take no visits or would like additional visits and, you know, to what you already have, because you like your governance, risk and control audit each year, etc., you would be able to then elect to take a chargeable remote service or on-site service depending on their needs. Is that correct?
Yeah, just the visit number that was up on screen, just use that, or if you've got an existing consultant, you know, details, then just get in touch and we can talk through the options.
Excellent, thank you. I think that's really important for firms to understand just exactly, and again, it's about, you know, appealing to different people who want different levels of service from us as well, instead of saying it's you've got to take a visit or you don't, end of, you know, it's having those different options available to them are clearly very important as well. So I was kind of touched on this, I don't know who wants to take this one, but how does SM&CR impact this? Jennifer, you touched on it a little bit, but I don't know if yourself or anybody else, and I guess there's the reverse. How does consumer duty impact SM&CR? There's kind of two questions in there. I'll throw it open to the floor if somebody wants to raise their hand. Nobody? All right, Mr. Greenwood, thank you.
Well, I guess when you look at SM&CR, we're going to get a new individual conduct rule 6, that requires all conduct rule staff to actually deliver good outcomes for retail customers, which, you know, will not be a stretch for the huge majority of firms. When you look at how the consumer duty and SM&CR interact, we've already got the SM&CR duty of responsibility, the senior manager conduct rules establish that kind of senior management responsibility for complying with all requirements and standards and of the regulatory system, full stop, and that'll apply to the consumer duty as well as all the other principles and rules. So there is interaction. When you read the papers, the senior managers and certification regime is mentioned quite a lot. So, you know, senior managers will be accountable. That's what
absolutely.
You know.
Yeah, fantastic. A few other questions, and it's been, I think we've kind of covered this one, but, you know, is there one person to be responsible within the business? Jennifer, you touched on that, but do you want to just answer it again, just for the questions that have come up? Yeah,
there should be a senior manager that takes, you know, responsibility for consumer duty as a whole. I mean, it may be that, you know, they've obviously got to engage dependent on the makeup of the firm. You know, we mentioned sole trader, limited companies. So, you know, the implementation plan does need signed off by the board. You know, it's supposed to be scrutinised and challenged by the board, but ultimately there should be a senior manager appointed for the implementation and embedding of consumer duty within the firm. I don't know if anybody else wants to add anything to that, but I would say, yep. Definitely.
Should we be testing admin staff, support staff, paraplanners? Should there be a test on consumer duty, and should we be implementing that?
I think that would be good practice, Janice, to have that, because this is something that, you know, it doesn't just apply to advisors, it applies to everyone in the firm, to ensure that everyone is aware of the consumer duty, everyone is aware of what the good outcomes are. Everyone in a firm should be working towards those good outcomes. It should be embedded right through. So, you know, having an annual test, an annual training session, an annual sort of training module to ensure that you're maintaining knowledge and awareness through, you know, throughout the firm, top to bottom, it will be good practice.
And that's an interesting point, Paul, because you know, in the actual paper, the FCA actually, I can't remember which page it was, Mark, but they've actually given examples of what good outcomes are, and that can be staff feedback, you know, staff ideas and things about how to improve. So, you know, certainly making all the staff is aware and getting feedback is an important part.
Absolutely. Right, well, I'm conscious of time, but I'm going to throw you all in the deep end, and I'm going to say, if you've got one takeaway, what would that be? So I'll start with the gentleman. I'll go in order that we did the sessions today. So if there's one takeaway you want to give to our audience today in relation to consumer duty, then could you give that to me? So Sandy, you can kick off. You're getting no chance to think about this. So there's at least a minute or two.
Well, on the other hand, I've got it easy that I'm first up, but no, I mean, I think the thing for us, certainly policy, is this consumer understanding outcome, and it's something we've been talking about now for probably a year plus, and we've tried to create templates so that firms can really, in advance of providing their advice, you know, make sure the customer understands the risks associated with the transaction, you know, and that this firm can get that in the customer's own words for the file. Just puts everyone in a much better position if you know, if consumers are empowered to understand, you know, what the advice actually is. So that's my takeaway.
Thank you for that, Sandy, and thank you for your contribution today. Richard?
Yeah, well, I would suppose I'd say good outcomes. I think the best way you can demonstrate a good outcome is by having independent quality of file assessments and KPIs to demonstrate it. I think, you know, that will be the key big deliverable from the consumer duty, because that's what it's all about. It's about ensuring that people have got the right products, the right solutions, at the right time to meet the needs.
Excellent. Thank you also for your input today, much appreciated. Mr. Greenwood?
I'm going to give two, but they'll be very quick, I promise. The importance of that gap analysis plan is going to be published shortly. Working through that, make sure you've got that, the board have an understanding of it before the 31st of October. And I want to steal some of Jennifer's thunder, the importance of MI. What Stephen referred to today, and I never leave home without it, is page 118 of the finalised guidance, and that lists types of MI firms may want to consider to demonstrate they're giving good consumer outcomes. That'll all be covered in our gap analysis plan, but if firms want a quick heads up, page 118 of FG 22.5, and you'll see there, and again, the importance of file reviews, really, which Richard said, really comes through on that as well.
What a perfect takeaway. 118 is the way to remember what page you need. Don't know if 118 still exists. That not directory inquiries or whatever now. I don't know. But anyway, moving away from the purpose. But thank you very much, Mark, and thank you also for your input today. Stephen?
Well, I was going to say file checks, but Mr. Nuttall beat me to that. But new business registers. You know, it's very often an area where we see scant information, just the minimum information. Go back and have a look at that. Make sure that that new business register is collecting what you need it to, and make sure that all your advisors within the firm, whether they're ARs or RIs, they're collecting the same kind of information. It's consistent through the firm, because that management information, that new business register information, is going to be essential.
Excellent. Thank you very much, and thanks for bringing your mortgage protection knowledge, etc., to us today also.
No worries.
Thank you. Karl?
Two things, as Mark has already set the bar on that one. First of all, I would say make sure your implementation plan is really solid, over-engineered, and really focused on what you would do to get the job done. Secondly, start working on the consumer duty now and don't leave it till the last minute, because a regulator might pick up the phone and speak to you about it.
Excellent, thank you, and thank you for bringing your knowledge and your face to the screen again for us. We'll no doubt see you in the press shortly, if not before. Thank you for that, Karl. Ladies first, Jennifer?
Good, hopefully I'll steal his thunder. So yeah, I mean, MI is imperative, but I would say really it's get your diary out. You've got 10 weeks, you need to have an implementation plan signed off by the board. So I think now you have to say, okay, who's going to take responsibility for consumer duty? But who else do you need to engage with? We've all got busy diaries, you know, there's still holidays going to be in the diary as well. So it's really important for firms to say, right, okay, how are we going to do this? You know, if you're looking for compliance support, then absolutely get in touch with us. This can be done remotely as well as, you know, on site. So get it planned and engage with who you need to engage with as part of the process.
Exactly, no, great point, because there's always no doubt somebody in the radio start to tell us how many days it is till Christmas, and certainly October, and my diary comes before Christmas, so they're not long for sure.
And consumer duty is certainly not as good as Christmas. That's for sure.
Thank you for that. Paul, last but not least.
Well, you know, as a guy who's obviously partial to a takeaway, I would probably go down the road of just saying, don't underestimate it. You know, there's a lot of work there. You know, SimplyBiz have got a lot of clients, SimplyBiz and Compliance First, and we see clients with a lot of good practice, but there will still be gaps. So make sure that you're fully aware of where you need to be and constantly watch those milestones, put those milestones in your plan over the next 12 months so that you're really comfortable that if anything unexpected crops up, that you're going to be on top of it and not have to rush it in the last few weeks.
Excellent. Right, well, that is dead on 11:45. Really just leaves me to say thank you all for listening. Thank you to our panel today and all their input and bringing their knowledge and skills, etc. to us, and for all of you participating today. As we've said, just to reiterate, lots of support there, but also in addition to that, we will be picking up all the questions and answers and pulling together the best way to get them out to you, whether we drip them out, put them into the hub. There'll be various things that we'll be doing going along the way, but we are here to help you through this process, you know, and to hopefully build a much stronger and a much more robust profession for all of us going forward. The consumer duties, yes, it's another layer of regulation, but let's just, you know, nail this, get it done and be in a better position than we already were before. So thank you very much, everyone. Have a good rest of the day and enjoy the long weekend if you are fortunate enough to have the bank holiday off on Monday as well. So thanks again. Take care. Bye-bye.